With oil having risen to OPEC's nominal recent target of $60 a barrel in 2017, in fact, Brent is well above that, which is the OPEC benchmark. Where now for the price of crude? Malcolm Granwood joins us from malkysblog.com. Malky, welcome. We were talking in June last year when oil was languishing at $43 a barrel. Seemed relatively confident that it would reach 60 by the end of the year, and here we are now at well in excess of that for Brent. First of all, what's been driving the price of oil?
And the reason I was confident back in June, and it wasn't an easy call. I was very tempted to cut my year-end target of 60, but I did believe that as long as the OPEC and non-OPEC pact continued, they would take enough crude oil off the market to make that marginal barrel go up in price. And if nobody cheated and everyone came into line, which they did, even the Russians, they're 300,000 barrels a day down. The Saudis actually produced less, or cut their production by more than they were allowed to. Everybody else stayed within 95% of their quota cuts, and it worked. And they suddenly realised within the OPEC and non-OPEC community that if they cut production by 10%, they would increase their monthly checks by 30%. In fact, the oil price, having been down at 27, but since they did it at 45, did go up to the 60 that they had planned to, and now a little bit further. The second half of the year is also a better half for demand. So they'd had the difficult half of the year, and whilst particularly US investment banks who were cutting their prices like crazy, hadn't worked it out that the second half was going to be better. The demand picked up slightly, and of course we had the usual. Whenever people don't expect it, you have geopolitical issues. So we had problems from Venezuela, and we had problems on pipelines and all sorts of things, and therefore just at a time when the oil price looked like it might tick down, the Keystone pipeline went down, or Venezuela went down, or whatever it happened to be. So a whole bunch of things came together at the same time. So it was a bit of a fluke. But I'm not saying it was anything.
Well, I'm going to ask you now to nail your colours to the mast for 2018, because clearly with this rise that we've seen, if we bring up a chart of Brent crude, you can see the impetus that we've got at the moment. This is a tremendous trend that's in place. What are your forecasts for this year?
Well, I mean, the forecast in a nutshell is $65 for June and 70 for December. They're just targets, but they're what they are. So that tells you that there's not going to increase between now and June, because it's 66 or 60, whatever it is at the moment. But the point is that I expect next year or this year to be almost a mirror image of last year, i.e. a slightly difficult first half and a better second half. So actually, if I was to say anything like in the short term, that might just ease down a bit, and it would run up towards the summer. Don't forget, you have the OPEC meeting in June, which will decide whether or not things are going well enough to be able to just ease back a bit off the cuts. But if they've got to June and it's done well and it's still in the 60s, then the chances are that the 75 might be more realistic than 70 for the year end. It's really important to see, if they get through the period of the first half where supply is up to them and demand will be higher, and we don't have any huge geopolitical problems, then that's fine. But this year, it's sort of wrought with potential, sort of problems in the road, because we've got elections all over the place. We've got elections in Russia, we have elections in Iraq, we have, I think that we're going to still have problems in Venezuela. I think that we've got a full set of elections, presidential elections and so on in Nigeria, and the last time we had that, all the terrorist groups get together to plant bombs in the Niger Delta and that sort of stuff. So, there are quite a lot of problems to come.
Yeah. But assuming those problems are ironed over, you mentioned the fact that if they cut by 10%, the price goes up. But assuming that if they do break their agreements by 10%, presumably the price could be down substantially.
Absolutely, no doubt. If they decide, first of all, if anyone does start to go for higher production, there's $20 of downside easily. It could easily be back to $40, which is $25 off today, and that might happen. But then it would certainly probably make them think that that was a stupid thing to do. I think as long as you have the relationship between Russia and Saudi, you're going to be okay. Russia, Putin has got his own problems because his gas industry wants to start increasing production. But as long as they understand the economics of it, I think the most difficult thing will be that as the whole group gets towards June, I think they will want to start talking about, say, taking down from down 10% to down 5%, and they're going to say, how are we going to start, going back to producing a little bit more than we were? If that gets out of hand, the price will fall.
Yeah. One last question. The EIA recently has issued regularly comes out with its monthly stockpiles. It says in the last 5, 6, 7 months, I think, that stockpiles have gone down by about 20%. Have we got an oil glut? Is there still a reason for OPEC to be cutting production?
OPEC should still be cutting production because that glut is still there, but it's way less than it was before. And this, what we've come into 2018 with is stock levels much less than were expected, and the 5-year average, which it was way above in the middle of last year, is now back to some sort of normality. And the interesting thing is that if we do see sort of pick up in world demand, we're going to see more refining, and therefore the product market is will see demand, and more refining. I mean, the cold winter that we're having in the States, for example, is going to, they'll need distillates, diesel and heavy fuel for factory heating and so on. So the distillate market will drive, and of course, so I expect to see refinery rates go up and runs go up, and therefore they'll be buying in more crude, and so domestic crude in the States will see a bigger demand. So I think that we've got the opportunity for a short-term pick up quite nicely. They just don't need to drop the ball halfway through next year.
Yeah. Okay, all right, Malcy, thanks so much indeed. Malcolm Graham-Wood from malcysblog.com with a look at the price of oil looking out to June this year at 65 and 70 potentially by the end of 2018.